Hey, everybody, it is Eric Green. Thank you for joining me on this week's podcast. Uh, what I'm going to talk about today, I don't want to offend anyone, but what I want to talk about today is why your 1040 practice is fucked and what to do about it. And let me explain. Like I said, I don't want to offend anyone, but we are now embarking on another tax season. And I'm listening to all of the accountants who I'm friends with who are gearing up for what is going to be the 3-month slog. And I just want to tell you something, and I've spoken about this before, but the world is changing. The 1040 business is changing, and not for the better, for the worse. All right, let's just run through some statistics, okay? The number of people most people do their own 1040s now. Now, if you go and look at the IRS statistics, you'll see that last year it was 48.6%, I think is what the number was. So how could I say most people do their own? That's less than half. Remember something. That number includes all of the people at all of the big multinational and supersized accounting firms, the hedge fund managers, the corporate CEOs who are going to have those companies do their returns anyway. Not too many CEOs of publicly held companies are going to say, you know what, I'm glad you did my corporation and all of our offshore entities and the F-bars and all that stuff and gave me all my K-1s and W-2s, but I'm going to go do my own return in TurboTax. Yeah, that doesn't happen, right? So they're going to have those firms do their returns anyway. If you were to pull all those people out, we are over 50%, and that was in 17. We now have an increased standard deduction, which, by the way, is going to eliminate many people who used to file, itemized. Right, and because I do so many criminal cases, we see this a lot. One of the areas of real abuse was unreimbursed employee expenses. Well, that for the most part is going to be gone now. The charitable deductions that people used to, for goodwill receipts, that's all gone. All of that stuff is going to vanish. Most of those people are going to now be on 1040 EZs or the quote unquote postcard. Well, you can do that for free online. In talking to some of the IRS executives, I'm hearing they think this number in the next 2 years may go as high as 70%. So the number of people coming in to just do 1040s is going to vaporize and go away. All right, it's already happening. It's going to accelerate. The other thing is the average price of a 1040, and this is all 1040s. The complicated and the simple. The average 1040 back in 2012 was reported to be $327 a return. Now, that was 2012. 2016, $261. It is falling, not going up. Why? It's been commoditized. You can thank H&R Block and Liberty Tax and all the rest of them for that. Right? I mean, there's 28,000 H&R Blocks in the middle of a Walmart. So it's viewed as a commodity that you can get anywhere. Right? And let's be honest, most taxpayers don't know how to use their accountant properly, and therefore don't value what it is. If you're an accountant listening to this, they don't value what you do. Now, I value what my CPAs do because I know what they're doing. But the other thing is we're working with our folks throughout the year, right? I mean, here's the way it should work. Here's what taxpayers should be doing, right, with their accountants. Right? They should be meeting monthly or quarterly, going over the financials, deciding, where they can make some financial moves, doing some planning, so that by the time you get to year end, you've done your planning, you've been as efficient as you can from a tax perspective, and now the return is, as we like to call it, the report card. But most people don't do that. They don't want to pay the accountant, the EA or the CPA, or even the QuickBooks Pro Advisor are viewed as overhead. as an unnecessary expense that nobody wants. And so they don't want to meet with you quarterly, or they're too busy. And then they come and they bring you a big shoebox full of shit, in February or March. And all they care about is, how much money do I owe, or how much money am I getting back? We all know it's true. This is not the basis for a way to make money. The other thing you need to understand, and it's not just the accounting profession, as you can see from what is going on politically in America, right? Disruption always happens. It happens to every industry. It always has. It always will, right? It happened to the agriculture industry, but here's the difference. Technology now is accelerating this at a pace that in some cases is a little bit frightening. Like agriculture effectively got destroyed because of, automation, machinery. There aren't too many farm hands running around anymore. It's mostly done by machinery. And it destroyed agriculture. But it took from about 1885 to like 1915, right? So there's like a 30-year span. Technology today can wipe out industries in 12 months, sometimes faster. I mean, just look at where we are right now. The largest cab company in the world, Uber, owns no cars. The largest hotel chain in America, in the world, actually, Airbnb, owns no hotels. Right? Alibaba, and Amazon are destroying retail businesses. Right? Everything gets disrupted. The accounting industry is also going to be disrupted. I am friendly with the people who are working on destroying your jobs. I hate to tell you that, but the reality is artificial intelligence and automation eventually are going to take over not only the bookkeeping business, but the tax preparation business. Right? This year at the New England Iris Representation Conference, we are pulling together a panel, and what you will hear from some of the CIOs and the CEOs of some very large regional firms is that there will be no human beings as far as staff doing tax returns anymore. It is going to be completely automated, right? What used to take 50, junior auditors months to test 5% of all of the transactions of a company. Not anymore. 2 professionals and a laptop can do 100% in a week. Why? Artificial intelligence. They can actually go through and test every single transaction. And in fact, at some of the larger companies, this has been rolled out. They're testing it in real time. The auditors are there year round, and it's being audited year round. So the waves of accountants who went into these big firms and spent years, grinding away, worked their way up to partner, not anymore. In fact, the CPA designation will now have a special area for people who are just doing the technology piece. The world is changing, right? We need to change with it, right? But just so you know, every career gets disrupted. They're predicting in the next 20 years, by the way, 3D printing will wipe out 300 million manufacturing jobs worldwide. Self-driving cars, they're not for me and you. They're for the trucking industry. That will take care of 10 million more jobs. Why? Self-driving truck doesn't need vacation, doesn't need to sleep, doesn't need health insurance or health benefits. So what do we do about it? If you're listening to this, you're like, great, Eric, thanks. You're making me feel wonderful right before tax season. So what do we do about it? We elevate our game. What you need to do is elevate your game. All right. Now, I've been saying this now for a couple of years, about 2.5 years. Ever since I saw that demonstration of AI doing the bookkeeping, I've been a little freaked out at where this is all going. All right. What we need to do, all right, we need to elevate our game. And by the way, this is nothing new. Right? When I say that, Dominique Molina was just here a few months ago on the podcast. Marriott Martinez will be joining me, I think, in the next month or so. The message that you're going to hear and keep hearing is you've got to elevate your game. You've got to become a high-end consultant. Dominique has got the certified, tax coaches program. Marriott has got, we are self-employed and, tres tus madres, where they're trying to get accountants and bookkeepers to elevate I keep saying elevate your game. What do I mean by that? You need to change the way you are going to approach your tax practice. Right? Going forward, you got to change the way you think about this. It's not about the 1040. The 1040 is the report card. The true essence, I would argue, of tax practice is to understand the rules and be able to help taxpayers so that they can basically, as efficiently as possible, save as much money as possible within the rules. That means structuring companies, structuring transactions, taking advantage of retirement accounts and every possible, I don't want to say the word loophole. Loophole sounds negative, but those advantages that we give. And listen, these are handed out. For instance, we like real estate. In the U.S., we love real estate. Therefore, we want to promote people investing in real estate. So it's considered passive income. You can get depreciation. You can shield lots of income. Just ask the president and his son-in-law, Jared Kushner, about sheltering money. Legitimately, by the way, through real estate. Why? Because real estate, first of all, it's nice to build things, but that creates jobs for construction. It creates jobs for bankers. Money gets loaned. It creates communities where people live and they work and they pay taxes, and we all were just sort of in love with real estate. Okay? But you got to kind of change the way you look at this. The other thing, and this is one of the things that make me nuts. There are lots of people who believe that I'm a tax professional. I can go online, I get some free CPE, and I can check my box. And let me tell you something, all right? You must have, and this goes for anything. I'm talking about the tax profession, but this applies to anything in life. What I would suggest to you is what was told to me when I was a child, and that is this. You must have excellence. What I mean by that, you must win at anything you do. There is no place like first place. Anybody can be ordinary. All you have to do is breathe. You want to be the very best at whatever it is you do. If you want to be a mechanic, fine, be an ace mechanic. Those ace mechanics who work on the Daytona cars make a lot of money. And I'm going to talk about going to Pep Boys, and no offense to the people that work at Pep Boys, and go to Pep Boys and stock shelves and loosen up tires. I mean, if you want to be a mechanic, you want to be the very best at what you do. If you want to be a doctor, you want to be a brain surgeon. If you want to be an attorney, in my mind, securities, tax, you want to elevate and be at the height of your profession, whatever that profession is. So even if you don't believe me that the 1040 business is going away, and you believe that you can keep your H&R Block type practice going forever because your clients especially love you and they won't mind paying for you even if they can get it done for free. Let's assume that for the moment. Why? You got your EA or you got your CPA. Okay, that's the bare minimum. Why not become a certified financial planner? You have a relationship with your clients. They trust you. Be the best. Give advice. Get into certified financial planning. You're an accountant. You're doing books. You like doing some of that work. Become a certified, fraud examiner. Get your CFE. Become get the forensic aspect of it. Elevate yourself. I can tell you right now, the CFEs we hire in some of our cases, $600, $700, $800 an hour. They're more expensive than we are, right? One of the preeminent forensic guys in the country, Walter Pagano, he's a friend of mine. He's going to be coming on the podcast, I think, in 2 weeks. I may press him on this, but they get that money for a reason, all right? There's constant need. Divorce cases, bankruptcy cases, criminal cases, securities cases. The work is endless. And I can tell you right now, there aren't enough good forensic people around. And they are worth their weight in gold. Trust me, I have some taxpayers who have been cleared in IRS criminal investigation because of good forensic work. All right? State and local tax. The Wayfair decision by the Supreme Court has now opened up the Pandora's box on this stuff, right? Everybody, it used to be, when I was at KPMG and we were in state and local tax, it was really big companies that went to really big accounting firms and paid a lot of money for state and local planning. For instance, the New Jersey limited partnership strategy doesn't work anymore. But it was a strategy where if your only interest in New Jersey was through a limited partnership interest, you weren't taxed in New Jersey. You would be taxed where you were a resident. Well, how about this? Let's take a big company in New Jersey. We'll make a 1% corporate general partner. 99% we're going to put in a limited partnership that is owned by a subsidiary of the corporate parent down in Florida. So we can bleed off 99% of the earnings from New Jersey, where taxes are fairly high, down to Florida, where there's no income tax. And these were the games that were played, and by the way, are probably still being played. Well, now anybody who sells anything on the internet after the Wayfair decision, you've got to be looking at state and local tax. Suddenly, state and local planning for mom and pop is going to become in fashion. Are you going to get six-figure consulting gigs for limited partnership strategies? Maybe not. But does it make sense for dad to own one company that has one product and mom to own the other one, right? To keep below the 200 transactions in the state or the $200,000 threshold or whatever the state threshold is after Wayfair, right? Lou Beccari, who's the Connecticut first commissioner, came on. He's their general counsel, and he talked about how the states have been pushing, and truthfully, Wayfair is an attempt to correct because what's been going on with Amazon and everyone just killing Main Street to try to make Main Street more even, to even the playing field. But now your small businesses, if they're selling on eBay or Amazon or Alibaba or wherever, have now got to be considering, where are we selling? How many are we selling? What's the dollar threshold? And are there some planning opportunities here to avoid having to collect sales tax? All right. And by the way, those companies are now going to be subject to audit. Right? California in particular, they have auditors in almost every other state, or headhunters. Headhunters basically, they're like bounty hunters, companies that will go in and audit and they get a percentage of whatever they find. So they'll come in on behalf of the state of California or whomever, and they're uber aggressive about trying to find money that's owed because that's how they get paid. Right? So whatever you're going to do, whatever path you decide to do, I would urge you to try to be at the top of your practice, the top of your field. All right. The other thing is this: you can do this. Now, of course, one of the fields that I'm very hype on, and I coach people on, the whole basis of Tax Rep Network is IRS representation. Right? We have more than 14 million accounts in the collection division inventory. The director of collection has said they have identified 7 million non-filers that they're, as soon as the IRS wakes up, opens up again, when Congress gets its act together and funds the government, and the president get his act together. I'm not picking on one versus the other. Right? They're going to go after the 7 million non-filers. There could be 21 million people that end up in the collection division inventory. Why? Many non-filers are non-filers because they can't pay. Right? They owe the tax at 25% failure to file penalty, at 25% failure to pay penalty. Where do those people end up year after year after year? Big total, they end up in the collection division inventory. right? At Tax Rep, we're coaching people to handle these cases and add hopefully a couple $100,000 to their bottom line. Right? The opportunity is there. What you need to do, my next point, you need to figure out what it is you want. What do you want? Like for me, once I started doing this and I got the bug for it, because again, if you know the story, I was mostly an estate planner. You go back to my office in 2003, 90% of my revenue was from estate planning. It's what I did: wills, trusts, probate. And I had some clients get in trouble and I solved problems. And they were thrilled. And guess what? I was making more money. For a simple estate plan, I was getting $1,500 at the time. Wills, trusts, living wills, durable powers. Basic plan, $1,500. I'm making $6,000, $8,000, $10,000 on an IRS case. And it's far more interesting. And I decided, I really want to get into this. Well, there's no one who really just coached that. So I started going to the American Bar tax section meetings, and I listened to people who really, really were at the top of their game, and still are, by the way. Who I'm today, I'm very proud to call friends, one of which, Chuck Reddig, is our current IRS commissioner. And I would talk to Chuck and listen to Chuck and just, and to me, the goal was I wanted to be at that level. That's where I wanted to be, up the mountain where Chuck and Frank Agostino and Brian Scarlatos and all the other, Steve Tosher, Barbara Kaplan, name them, Kathy Keneally and Carolyn Cirola, where I viewed where they were. And that's where I wanted to get to. So your brain, it's like a servo mechanism. To understand, a smart bomb has a servo mechanism. What that means is it's smart so that if the target moves, it follows the target. Your brain will do the same. Once you know what your goal is and you set that goal, your brain will help you get to where you need to be, right? Inside Tax Rep, I hope we're helping our members get to where they need to be. What they need is training in this, they need review of that, they have a case they can't handle, we back them up. The goal is, if that's their goal, if their goal is to become a Tax Rep master, we are going to help them get there. And once they make the decision to go and do that, you'll get there. It might take 6 months, it might take 12 months, you will get there. Right? But you need to decide what it is you want to do, set your sight on the goal, and go get it. Last thing, and this is one of the insights in marketing. Used to be years ago that when it came to marketing was very simple. You made quality, kind of boring products for most people. If you can imagine a bell curve, you have your market leaders, like on the left, right? The people who are the first ones in, they want the newest thing of everything and whatever. And then you have like the laggards, right? These are the people that are still to this day trying to figure out if they want an iPhone or not. So you made basic products for the masses because that's what you'd sell most of. Here's the problem. Today, because of smartphones and computers and the constant bombardment that we are under, you don't pay attention. Nobody pays attention. So what does that mean? You've got to get attention. You need to get attention, all right? I mean, for me, I can tell you right now, for Tax Rep members, what we teach them is how to go ahead and put their marketing message where the people actually are. And by the way, my members spend very little money on marketing, right? We're not telling them to buy TV ads or lean lists or radio ads. Will that stuff work? Absolutely. Of course it will work. If you spend enough money and throw enough shit up on the air, somebody's bound to hear it at some point. I like to make lots and lots of money while spending very little. A little too rich for my blood, all right? I built $1 million practice. Jeff and I built a almost $5 million firm. We're not spending much on marketing, all right? It's about marketing smartly. You need to be where the potential clients are. But I will tell you this, you got to get attention. Whatever it is you need to do, do it. You got to scream to get it, get it. You need to get attention for yourself, your brand, your firm, your product, whatever it is, you need to go and get attention. So we're on the cusp of another tax season. Many of you are going to spend the next 3 months ripping out what's left of your hair. I wish you all the best. Get through this next 10 weeks, 12 weeks. I almost hate the count. Could be 14 weeks. I don't even know. Probably more like 12 weeks. But after that, I think you should seriously reconsider the direction of your tax practice. And I would urge you, if it's IRS representation, we'd love to have you come join us. But if it's not that, look at certified financial planning. Look at adding forensic accounting. Get into state and local tax, all right? Look at international tax, more and more international stuff. Again, becoming much more sort of mundane. It used to be big firms did international, not anymore. The internet has opened all of this up, right? Whatever it is you're going to do, I would urge you, one, be the best at whatever. First of all, figure out what it is you want. Set your goal. Two, go get it. All right? Go get it. Everybody has time. I don't, people, I don't have time. Yeah, bullshit. You've got time. All right? That is a bullshit. That's a fucking excuse. Everybody has time. Go to work after tax season, right? Work 9 to 5. Come home, spend a couple hours with your family. From 7 to 11, there's plenty of time to do damage. Plenty of time to work on your skills, work on your brand, work on your marketing. I don't buy that no one has time. That's nonsense, right? Stop watching fucking TV, right? And do something actually good for yourself. Find YouTube channels that are good for you. Find podcasts that are good for you. Find books, reading, listening, watching. These are 3 different ways of learning. Go find things that are good for you, all right? When I mean that, and it's not just, by the way, for your career, your health, your relationships, work on yourself, improve yourself. I've always been told the best way to change the world is to change yourself, right? But you can do this. Figure out what you want. Go get it, right? Excellence. Be the very best. Whatever it is you choose to do, go and be the very best at it, all right? And when you're doing it, how do you find the work? How do you build your practice? Get attention. If you're up for speaking, which like I do, go speak. Find business groups. Get up in front of business groups and speak. You don't want to do that? Blog, podcast, writing articles. Hell, just go to lunch with people and go to coffee with people. It's not that hard, all right? But go do it. But for those of you who are, again, on the precipice of another tax season, I wish you the best. You will emerge from this, I hope. Hopefully the government reopens by April 15th. And when you come out on the other side, start working on where you're going to go from here, because 1040 practice, as my title says, your 1040 practice is fucked. Now, again, last thought. Do I think it's going to go away completely? Next year, it'll be gone. You're all screwed. No. I think it's going to change quickly, but not that quickly. But the point is, you will probably find yourself working longer hours, doing more returns for less money. We all spend way too much time working. Most of us will spend most of our lives working. And what's a shame would be to do that and then still not succeed. All right? Figure out what you want. Go get it. Get attention. I'll see you on the next podcast.